Good afternoon, my name is Peter Higgins at Conkers on Twitter, and I am speaking with Charlotte Ransom, the founder of Netwealth Investments and one of the sponsors of the Master Investor Show today. Good afternoon, Charlotte. Good to have you.
Hi, good to see you, Peter.
Now, Charlotte, with all my interviews, I always start with finding out a little bit about the person, a Conkers Corner style interview.
Okay.
So I'm going to start with you as a teenager, what you studied and what happened from there on. I've got it all here in my notes, so I know where you might go wrong.
Okay. Well, I really was someone who was more interested in the arts. So I was a linguist. I studied languages for A-level. I studied more languages at university. And then actually it was when I was interviewing for jobs and thinking about what I wanted to go into, I was amazed that the kind of girly jobs were not interested in my languages, but the city was. So I ended up getting a job at JP Morgan, the bank, much to most people's surprise, since I'd expressed no interest in banking or finance until then. And I was a little bit skeptical about what it was going to involve, but it meant 6 months training in New York, and I had an absolute blast while I was out there. I learned a lot, and I realized that it was something that I could really get my teeth into. I mean, I'm a pretty competitive person, and the environment was one that was super interesting. We actually, I was hired in 1987 during the crash, so we lived through the crash. We then, as a young person going into the business then, it was fascinating because I could see how people behaved, how leaders managed their teams, how good decisions were made, how bad decisions were made. So for me, it was a very informative period. Did I think that I would then be in investment banking for 25 years? No. But I was headhunted to Goldman Sachs.
So tell us about that, so don't skim over it. Headhunted by Goldman Sachs doesn't happen to many people.
Well, again, I'd spent 5 years by then at JP Morgan, and I had moved into an area called derivatives, which was at the time a sort of burgeoning area, quite technical, quite mathematically complex, and one that I was starting to grow up in. And I was hired by Goldman to help bring together that effort in Southern Europe. And so it was a fantastic time to join them. It was a much smaller firm then, it was a private company, so I lived through it going public and IPOing, but I also sort of grew up with the derivatives market during that period as well. And then it wasn't until my last 5 years at Goldman that I switched to the private wealth side of the business.
Right.
And that really was the thing that started to help me think about the private wealth business in general, particularly how it looks in the UK and what I thought about it.
Absolutely fascinating journey. So then you took some time out and you're having a look around at all the different entrepreneurial things going on in the fintech and financial world.
Yeah.
And you got involved with a few startups and then decided to start your own.
So my problem was, and this is a high quality problem I admit, but after 25 years working really hard, I'd been very well compensated, but I had done very little with my money. So I knew the reason for that was I'd been working very hard, I'd been compliance constrained.
And going across the world, backwards and forwards.
So like lots of busy professional people, I hadn't done enough with my own money. And I hadn't really thought about, okay, well, what am I planning here? I've got children to educate, I've got my retirement sometime one day, I need to get organised. And then I started to have a really close look at the UK wealth management arena,
yes.
And I didn't like what I saw because it was very encumbered by legacy issues. So parts of the service made a lot of sense, but then when you looked at the net service, so then you looked at the bricks and mortar, the very expensive sales teams, the armies of people in operations and middle office seats, it just seemed to me that we could do this a whole lot better.
So I noticed on your website there's a graph that goes up like that, and there's a significant, I think it's £249,000 difference between somebody who's invested £500,000 and then gone up. So there's a big difference in the sense of your fees, the cost, and your structure, and your ability to generate far better returns by the structure that you've utilised for fintech.
It's less about generating better returns because we're not market timing. What we do is we believe in active asset allocation, so getting your allocation across globally diversified portfolios right for different levels of risk. And then to do that in a supremely efficient way. So that is usually through passive funds or tracker funds. And then our costs are very low. So I think what you might be referring to is that, one rule of thumb I think about is that if you're paying 1% per annum in fees more than you need to, the cost of that over 10 years is 14%. So for every £100,000 you have with a wealth manager who's overcharging you, that's £14,000 you're just giving away.
Absolutely.
And this really started to make me think, because actually, by being a relatively young company, what we've been able to do using technology is to take away all of those inefficiencies that are just built into the wealth management world.
Yeah.
So we very deliberately, we took the really good things that we believe everyone wants, kind of quality of team, active asset allocation, access to advisors, super important things. But then you bring that into a new technological framework and you create something which means now your clients have better access to their investments, they can understand performance better, they know how much they're paying you, and it's a half to a third of the industry cost. So, what's not to like?
What's not to like, exactly. I found it very interesting, some of the backers that you had as well when you started off. I mean, clearly they've been watching you from JP Morgan to Goldman Sachs, but tell us about some of the backers that...
It actually was one of the things that was fascinating to me. So when we looked to fund the business, we decided to have individual backers rather than institutional backers. And one of the reasons for that is because these are people who have their own views on wealth management. So people who backed us were Edward Bonham Carter, for example, Harvey McGrath, who's ex-Pru and Man Group, Bruce Carnegie Brown, who was chairman of MoneySupermarket.com, now runs Lloyd's Insurance. We have Dame Alison Carnworth, who is a very well-known senior female who used to be chairman of British Land Securities, I think one of the only women in the FTSE 100. Lots of very interesting, very accomplished people, and they've actually stuck with us through our journey, through 2 rounds of funding, and that's been a sort of a real area for me of sort of helping us be confident that we're doing something which is genuinely differentiated. Because these are all people who have endless choice in terms of who manages their money, but also in terms of who they invest in.
Absolutely, it's a fantastic endorsement. And obviously, when you first came onto the market, you were coined as being a robo-advisor. But one of the things I've noticed as well is that the headcount has gone up like that, in the sense of you're adding that personalised service to the individuals and the clients that you're working with. So that's far more than most robo-advisors are doing.
Yeah, I mean, it's actually an interesting point. So when we first launched, there were probably 6 or 7 launches at the same time as us, and everyone was categorised as a robo. We've never been a robo, so we're a hybrid offering. We've always focused on people. The reason we're in central London is because clients come and see us every day. So our average portfolio sizes are dramatically 10 times, 20 times higher than a typical robo because of the type of people that we're servicing. And that was always the plan, that this is more about taking people whose assets are with a traditional wealth manager and helping them achieve these efficiencies that I was talking about. So now when the press talk about us, they talk about us as a wealth manager or as a challenger wealth manager, which is much more on point.
They also talk occasionally about your philosophy in the sense of you're a driven, ambitious, super successful woman as well.
Yeah.
So you're a role model for the other women and saying, yeah, come on, this is not just a men-only sort of industry. So that's a fantastic thing you're doing as well.
Well, it's really interesting you raise that, because one of the things I'm passionate about is to get women to feel more confident about investing. This is going to be more and more important. Next year, 50% of UK millionaires will be female. Some say over 50%. And yet for a lot of women, they still talk about it as something that's not really them. And one of the things we found with the technology actually is you help them grow more confident, they understand better, and then they start to use the technology to help them, multitask the same way they might do a kind of weekly grocery shop. They start now to be more confident about, okay, here's what I'm doing about school fees, here's what I'm thinking about for retirement, here's my pot that I'm going to use for more sort of sundry things. And that is something which is hugely empowering. So in our client base, 45% of our clients are women. And traditionally in wealth management, it's probably more like 23%.
So you've touched on a few things that I was going to talk about a bit later on. Children, ambition. You've got 4.
Yes.
And you're also working with speaking at schools and also Save the Children. So as a woman, most men will say, they can't do all of that. You're doing that. And beating the men at their own game. So all the people watching, what's the secret to doing all of that and still being successful as you are?
Well,
and bottle it, patent it.
Well, actually, one thing I always say is it matters that you have the right partner. So I've mentored a lot of young women, and over time I've always said, joking aside, you need the right partner, someone who's going to recognize that what your ambitions are as important as their ambitions and figuring it out together. So yes, we have 4 children, and we have always done it together, in whatever that means. I mean, it just works. I've also always wanted to make sure that my children, know they have a mother, and that they feel that they get enough of my time. So one of the really interesting things, actually, about finance is, and actually this, I guess what I think I would say as advice is that to be in a job where you can see how productive someone is, because if the production is transparent, you can manage your day as you want, right? No one's going to argue with the facts. So banking for me was a fantastic business to go into because people could see that I was doing well and I was being hugely productive. And that meant that if I wanted to go home and put my kids, give them a bath, read a story, whatever it was, that was fine. But I am passionate that we make the workforce a better place for everyone. I mean, one of the interesting things at Netwealth is close to half our employees work remotely. So the employees that aren't client-facing and are building the technology and are hugely important to who we are and what we do, actually spend 9 days out of 10 working from home.
That's fantastic.
And then every other Thursday, they all come in and we have the whole company together. And that, for me, is super important. So we've really tried to drive the culture of the firm to be this sort of, open, embracing whatever it is that helps people be as productive as possible and acknowledging that people have different ways of running their lives. So related to that, I do go and speak at Speakers for Schools, and it's always great to talk to children, usually in the sixth form. So they're starting to think about going to university or going to college or maybe going into the workforce, and to try and make them understand how they can make themselves more valuable, how they can become noticed. Because a lot of this is about getting on someone's radar.
Absolutely.
And once you're on someone's radar and you have someone who's beginning to think, Peter's pretty handy. I've noticed he's asked some interesting questions and he's always there for me and he's gone the extra mile. You start to become really important to that more senior person, and they then will continue to bring you into their world and to coach you and so on. And that for me is something that I want those young adults to know about, so they kind of go ready thinking about that when they leave school.
That's brilliant. Now, I've got 2 more questions for you. I'm going to go back to Netwealth in the sense of the growth that they've had so far, and what's your goals and ambitions for your 3 years in-ish sort of thing? So you've got a 5-year plan for the next 2 years. What beyond 5? What's your thoughts? What's your aspirations for Netwealth?
Well, we are growing at a tremendous pace. What was interesting is we started obviously with nothing. I was client number 1. Tom Salter, my co-founder, was number 2. And what we obviously began to start was that people who knew us and were excited by what we were doing put money in. But obviously, what happened very quickly is a whole load of people who'd never heard of us, and they ended up getting to know about Netwealth, whether it was through friends who told them about us, or the Master Investor Show, or they saw an ad in City AM, or wherever it may be. And so what is exciting is that those people who are coming in are the biggest source of new clients, because they're then referring us to their friends. So for me, that is an absolute validation of the business model, who we're trying to help, how we're trying to help them. And so what I see over the next 2 years is that we are going to continue to grow at a very aggressive rate. We are only focused on the UK. That's the place where we feel there is, there are 6 million people in the UK who have between 100,000 and £5 million in liquid assets. Those people need to have a place like Netwealth to have their assets managed. And even people who've been doing it themselves, what we've seen with the recent market volatility is that it's not always that easy managing your own money. So now that they know there's a group they can come to where the cost of having their assets managed is about the same as if they were doing it themselves, there's another place for them to come and compare. And maybe they keep half doing it themselves and they put half with us. So, we are tremendously ambitious about where we can go with this, and everything that we're seeing in terms of who's coming to work with us, why they're coming, where they're coming from, makes us feel as though we are doing things the right way.
I love that reply. Now, my last question is regarding lump investing or pound cost averaging. Which field?
Which investing?
As in putting the lump sum invested in,
yes.
Or pound cost averaging
Yes.
over a longer period of time.
Right.
Which camp are you in? on a personal level, not net wealth, for
Well,
yourself?
I'll tell you exactly, because I think if you've been invested for a period with whoever, then actually if you come to net wealth or you go to a wealth manager, then actually you continue to stay invested unless you have a strong view that you want out. To me, you just stay invested.
Okay.
But if you're coming from cash, so we deal with quite a lot of people who've sold a business, for example. They're sitting there with cash, they've had the liquidity event, they look at what's going on around them and they say, okay, is this the right time to put all my money in the market? And there we are active in staggering in. So we have quite a lot of people who maybe will stagger in over 6 months, 9 months on a monthly basis. So you're just getting the average. And you take the emotion out.
Yes.
There's no market timing in this. You're just averaging in. And I think that's a very smart thing to do.
Charlotte Ransom, Netwealth, thank you ever so much for speaking with us
Thank you
today.
very much.
It's been a
Nice to
privilege.
meet you.
Thank you.